I'm Joshua Harris, a licensed insolvency trustee. And for this week's trustee tip, I'm going to be talking to you about bank accounts. Everybody has a bank account. And if you don't, you certainly should. If you can't get a bank account because every time you open one, CRA scoops it up, well, filing a consumer proposal or bankruptcy is going to lift that. And you're going to be able to open a bank account again. It's very important to open a bank account and to keep funds flowing through it. It sort of helps you integrate. Now, when you file a consumer proposal or bankruptcy, your trustee should always tell you that you have two options with your bank account. The first option is to go to a new bank that you don't owe any money to and open a new bank account. You set that up with your employer, your car payment, your rent, and of course your trustee. The second option, if you don't owe your bank money, would be to keep the same bank account but put stop payments for creditors. Now, why are we talking about opening new bank accounts or putting stop payments? Well, that's a great question. The reason is that even though we contact your creditors right after filing the proposal, and they have 45 days to vote, as we always talk about, sometimes it doesn't trickle down to the branch or the payment department or a third-party collections agency fast enough. So they still try to take a payment out of your account. So that's something we want to avoid because we don't want you to have payments coming out of your account and we're all scrambling to recover it. Now keep in mind that the Bankruptcy and Insolvency Act of Canada states that if they do take payment after your insolvency date, they are to return it under federal law. But that's not just so easy. So the best thing to do is put that stop payment, and if they take the money, call your bank and tell them that the stop payment wasn't effective. Hopefully you'll get your money back that way. The last resort is to call your trustee, and the trustee will work to get you that money returned. But of course, listening to all of these things, the best option is of course to open a new bank account, either at a bank you don't owe money to, or if you don't owe your current bank, closing your current account and opening a new one. Okay, why do I keep saying open a new bank account at a bank you don't owe money to? Well, there's a federal law called the right of set-off. A lot of people call it offset. And basically, the way this law works is that when you file an insolvency, which is a bankruptcy or a consumer proposal, your bank is entitled to take any funds available to them, so any money in your bank account, and apply it to the debts that you have with that bank, right? They can move the scale to work in their direction. So let's say you have $500 in your checking account and you owe a $5,000 credit card bill to the same bank. They're going to take that $500, apply it to your credit card, and then file a proof of claim with your trustee for $4,500. Now, obviously, we don't want that to happen. So that's why we recommend going to a new bank. Sure, you could have a $0 balance in your checking account at the time of filing, and in most cases, that is effective. But ultimately, your trustee tip for today is open a new bank account when filing a consumer proposal or bankruptcy to avoid anybody taking money they're not entitled to. And don't forget to like and subscribe to get more trustee tips on a weekly basis.